Hi, I'm Kerry. I'm the host of Best of Us Investors. I'm a retired financial advisor, and every morning for the past 2 years, actually it's over more than 2 years, I've gotten up and I've made a video on what I think that people who are in the investment world would be interested in, that I have some knowledge on and that I could share. Being a financial advisor for many years, I have an understanding, probably a deeper understanding, of what's going on a day-to-day basis, because I have a larger wealth of experience that I can draw upon. I've seen the dot-com bubble. I've seen all the subprime crisis, Black Monday, all the things that have happened. So I can relate to them. But still, sometimes I get up and I'm a little blank as to what I'm going to talk about today. And but yesterday I received an email from Kevin. Kevin's one of our tribe members. We have a tribe at our Discord where we communicate daily, and then we every Friday have a after market meeting and discuss the past market activities and what we think is going to happen in the future. But he sent me this list. He titled it Prime Acquisition Companies, and he detailed what their activity was since this turn in the market. And you can see in the fintech, there's a bunch of them. I recognize, of course, PayPal and Block Square and SoFi, anywhere from looks like 65 to 52% down. And then you have Pets. This brought back memories of the dot-com bubble, Pets.com, Chewy, and Bark down 80 to 62%. And then gambling down anywhere from 70% to 56%. Real estate down 75 to 71. You can read the names. Social media, wow. Pinterest down 71%. Snapchat, that's something my grandkids use a lot, down 55%. And then Teladoc down 70%. And it got me to thinking, why is this? Do I believe that these companies are doom and gloom? Do I believe that these are the Sears Roebuck of the future? Do I believe these are the Eastman Kodaks and the Polaroids of the future? I don't think so. But what does this mean? That's for another video. But because what I wanted to do then say was, which are the doom and gloom stocks? Where do we have amongst us the stocks that are going to disappear, much as Sears and Kodak and Polaroid did? Well, it's the companies that are being sought after and destroyed by technology. There are 6 companies, I think, actually it's more than 6, that you need to get away from. And then there are 6 companies that I think you need to buy as much as you can. And we'll get into that right after this.
Best of Us Investors presents Kerry Griegmeyer.
Okay. So today is Sunday, Super Bowl Sunday. How about that? And we have a game which will end with a winner and a loser. I guess that's called a zero-sum game. Someone will walk away a winner and someone will walk away a loser. Does that ever happen in the stock market? Yeah, it has. Where's Sears Roebuck? Well, they were the loser. The winner was Amazon. Where's Eastman Kodak? They're gone. Who's the winner? Well, it could be Canon or it could be Instagram. Same true for Polaroid. Similar in numerous. There were, at one point, there were, 1,900 automakers, individual automakers in the United States. We're down to 3. There's winners and there's losers. So if I can recognize that we're moving into an age that is going to create change. And as a result, some businesses only emphasis will be to put another business out of business. Well, those are the ones I want to sell. Okay? So that's what I want to cover in this video today. The emphasis is going to be who do you need to sell and get as far away from as you can. And so I've put together this list, and I'm going to show it to you all up front, and then I'm going to explain it to you. So here it is. The 6 stocks you should sell. And number 1 is ExxonMobil. Why ExxonMobil? Because they're going out of business. Why are they going out of business, you say? Well, let's look back in history and maybe we can get a clue. What was oil selling for in April of 2020? Do you remember? I do. It was for a negative $37 a barrel. A negative $37 a barrel. In other words, the oil company would pay you $37 to take it off the ship and store it in your tank rather than in theirs. Why was that? Well, there was no driving. Everybody was quarantined at home. And so the price of oil went down to a negative $37. What's it at now? It's at $97 a barrel. Well, why is that? Because we're all out driving again. For better or worse, we are. But wait, there are companies, the electric vehicle world, who are trying to put them back to the world of April 2020, when there was no demand for their oil. So why would you own that stock? Unless you think you're a trader. And then in that case, play with the wind. But in the long run, no, that's a stock to sell. And I don't mean just ExxonMobil. I mean Shell, I mean BP, I mean Valero, I mean all the oil stocks. They're doomed. This is Sears Roebuck all over again. It's over. The only question is when. Now, if you want to play with them between now and then, okay, that's what you should do. Number 2 on my stocks to sell, J.P. Morgan. And again, I'm not picking on J.P. Morgan. The whole banking industry, it's doomed. Sure it is. Look at digital currency. Look at blockchain. Look at the punitive action that your bank takes against you if you make a mistake. If you overdraft, they punish you. What does Amazon do if you buy the wrong product? If you push the wrong button, what do they do? I'm not even going to answer that question. So, the banking industry is doomed. Again, the only question is when? When? Again, if you're a trader and you want to play that game, this interest rate and quantitative easing over the next couple of years, okay, but they're doomed. Put them over there with Sears Roebuck, Kodak, and Polaroid. Okay? General Motors. This is an elephant that just can't die. Went bankrupt the last time we had a financial crisis, and the government came in and said they're too big to fail. There's too many people working at their factories that we can't let them fail. We have to bail them out. Is that going to happen again? Of course it's going to happen again. They can't keep up with the revolution that's going on in the electric vehicle business. They're burdened with unions. They're burdened with debt. They're debt. What's it called? Death walking. They're just waiting to die. So the EV. We even heard this week that Joe is declaring that we will have an electric charging station on every highway every 15 miles within 3 years. So that gives you a clue as to when they're going to die. And I'm not only talking about General Motors, but these auto producers that can't wake up to the change that is coming. So that's going away. PG&E, Pacific Gas and Electric. I only put that in because that's an electric company that everybody knows because of their burning up California, and they've been on the news. The world has recognized that, hey, there is something called global warming, and hey, fossil fuels are the problem, and wait a second, the sun is the greatest source of energy that we can have, and if we can put a battery in our garage and a battery at every 50 miles on the highway, we can provide all the electricity we need from the sun. So why would you own somebody who burns coal or oil, which we know is also a pollutant, because they're going to go out of business? This is not rocket science. This isn't Elon Musk thinking. This is just recognizing the obvious. And again, I'll say, you can play the game, but eventually you're playing with a dead dog. Okay? Then Tyson Foods. Why did I put in Tyson Foods? I read something, or I saw it in a video that what is it? Six cattle, is that right? Put out as much methane gas and pollutant as 2 automobiles in a year's time. And it's killing animals. I know the Bible says there's a difference between human beings and animals, but from a medical standpoint, we aren't all that different. We have opposing thumbs, we have different brains, but Tyson Foods, meat, Impossible Foods are companies that are going to say, take the plants that are available to us and provide us with a better and a more economical and a more humane way to feed our bodies, and probably be more beneficial as far as the preserving of our bodies and our living longer. So Tyson Foods, and you know the others, they're going to go out of business. Plant-based foods is going to take it. Again, is it going to happen next week? No. Is it going to change the price of Tyson Foods next week? No. Next year? Probably not. 5 years from now, I'd be cautious. This is not a long-term hold. None of these are long-term holders. And then my sixth one. This is just kind of a fluke I saw. Peloton. I was over at the shopping center about a week and a half ago. It was a pleasant Saturday, and I was walking around the perimeter of the stores. This is our luxury mall, and in the elbow of the mall was a store, and it was a Peloton store. And I can remember how that store used to be very busy. It was like the Apple store. You had to wait outside because only so many people were allowed in. But standing in the open doorway, just beyond the open doorway, was 2 people standing in parade rest. That was something I learned in the military. Their hands behind their back. They had on khaki pants and a black shirt, and they were standing there waiting to greet the customers. And there were no customers, and there are no customers. Peloton was an enigma of the coronavirus. Once we had the option to come out of our basement or our bedroom to get our exercise, we're out of there. That bicycle becomes a clothes rack. Unless they can come up with some other use for it. Someone said they need to put Netflix on it, and that would entice me. I don't think so. When I watch Ozark, I want to concentrate. I need to understand what's going on. I can't be riding my Peloton. And I for years, up until the pandemic, I went to spinning class at least twice a week. Never got a Peloton to set next to my weightlifting, universal weightlifting machine that I never use. It's already becoming a clothes rack. So those are the 6 stocks that I think are just evidence sell. Get away from, at least unless if you're an investor. If you're a trader, yeah, they're going to be volatile. They'll be up and down. They'll move with the fear and threat, the fear of interest rates. That's another thing I think is so crazy. Interest rates are going up because prices of goods and services are going up. Well, of course they are. We didn't produce lumber for 2 years. So the guys who are putting up my new deck right now, you might hear some banging, and are charging me 50% more than I would have paid for the same lumber and replacing my deck in 2019. That's understood. And then the price of gas. Well, of course, it used to be. It cost $0 because nobody was using it. And now it's up to $4 a gallon. So yeah, what kind of inflation rate is that? This is temporary. This will go away. And if you're a short-term investor, if you're a trader, and please watch The Rock, our presenter, who is excellent on using graphs and charts to see breakout points and what to avoid and momentum. If that's your gig, yeah, go for it. But if you're an investor, it's not the place to be. So who are the stocks to be? Or we were talking about interest rates or inflation. Interest rates are, again, an issue of the government trying to manage the economy. The reality is they screw it up every time they do it. So just don't pay any attention to it unless you're a short-term investor. I'm not. I don't care. So that leads me to the 6 stocks I want to buy, and that's a no-brainer. If you've ever been to my channel before, you know that I believe that most of the knowledge, the expertise, the technology is owned by 6 companies, and that's Apple, Amazon, Google, Microsoft, Facebook, and NVIDIA. They own artificial intelligence. They own big data. They own my Fitbit, and they're monitoring my health. Hell, Google knows how many heartbeats I put out per minute for the last 5 years. I'm going to the doctor this afternoon because he doesn't have a clue. He has to put a thing on my arm. He doesn't have a clue. Google knows it. Why doesn't my doctor just contact Google? Why do I have to go down there? They know. Apple knows if you wear an Apple Watch. So they are in every element of this. Are they in electric vehicles? Yeah. Yeah, Google has their vehicle, and Apple is pretty much determined that they're going to have their vehicle, and Amazon has their vehicle. So they're in that. They're going to put GM and Ford and those folks out of business. Are they involved in... the only thing I'm not sure they're involved in is the plant-based foods. But if there's money in it, they're going to be there. They own artificial intelligence. That is going to be the driving force of our world. It is going to eliminate inflation. It's going to make currency irrelevant. So why wouldn't you own those 6 stocks? Now, you'll notice if you've been to my channel or you're a member of my tribe, I have not mentioned biotech. I'm not going to mention it because you know that's where 25% of my portfolio is. But then I want to come down to that last one, real estate. This is something a lot of people don't understand. The fact that, well, there's going to be a real estate crash. Is there really? Give it some thought. Right now there's a shortage of homes. I went to Zillow. I live in a neighborhood, the wealthiest neighborhood in Alabama, and I looked at a map from Zillow for a 3-mile radius around my house. I live in probably a $700,000 home. There is not a home for sale within a 3-mile radius of my house. Why is that? Who owns all the houses within 3 miles of my house? It's baby boomers or Generation Xers. We're the only people who have $700,000 to $1 million for a home. So why aren't they up for sale? We're aging. Yeah, we're aging, but we're not dying. My father had to downsize when he reached 77. I don't have to. My neighbors don't have to. We're still vital. We're still playing. So who's buying my houses? Well, the millennials who have been successful, but I ain't putting it up for sale. In fact, I'm thinking about buying one down at the beach. So there's a shortage. Is that going to change? You tell me, are we going to all of a sudden start dying and putting our houses up for sale, and there will be more houses on their market than there is buyers? No. So why would the price of homes come down? Well, the Fed thinks because interest rates are going up. Really? Okay. Right now, I can borrow money for, 3.5% on a mortgage. They're telling me they're going to have 4 bumps this year. So that'll take it up from 3.5% to 4.5%. Hell, the first house I bought, I paid 14% for. And then when I was able to get an 8% mortgage on the big house I bought in Minnesota, I built in Minnesota, I thought I was in Fat City. Folks, you haven't lived in the real world. So, real estate. I'm going to do, in fact, I'm working right now. I think this is the most overlooked investment opportunity in the world for young people to build an empire of rental real estate. Now, I did this back in the early 90s, and I screwed it up. I really screwed it up. And it turned into a nightmare. And I'm going to share that with you. And then I'm going to share with you what I've learned as to how, with the use of an Excel spreadsheet, you can evaluate a home down to a nickel as to what you can pay for it and if it's going to achieve the objective that you have, whether it's building wealth or building cash flow. And I'm going to make that course available to you. It's going to take me probably 6 to 8 weeks to get it done. It's going to be multiple hours because I just don't believe. I believe there's a lot of people who recognize flipping homes, and I don't mean flipping homes. I mean creating wealth through a real estate empire. Who's the last guy we know who was very visible who built a real estate empire? Donald Trump. There's a lot of reasons he did that and why he chose and his dad chose to do that, because there are financial and tax advantages in there that you just don't have in the investment market. So I'm going to share that with you. But that's my video today. That's my Super Bowl video. Today, either at the end of the day, either Cincinnati or Los Angeles will be a winner or loser. And I'm here to tell you that the losers in the long ball game are Exxon, J.P. Morgan, General Motors, PG&E, Tyson Foods, and Peloton. Peloton will probably be bought by somebody, but that's exciting. That's the world I live in. Been doing this, as I said, since November of 2019. Didn't know what I was going to talk about today, But as you can see, I can fill the space pretty quickly. All right, I'll talk to you again tomorrow. And in case you're interested, I was born in Cincinnati, Ohio. A lot of my family still lives in Cincinnati, Ohio. So this game is going to be fun for me. We've already bought our food. We've got our TV cranked up. We're going to enjoy it. Talk to you again tomorrow.